Hmm. All right. Good morning, ladies and gentlemen. Welcome to the Real Stocks Really Big Show. So, Fed is coming out with their Fed announcement today at about 11 a.m. my time, which I didn't realize it yesterday was right after my power hour um, for crypto. So, I'm going to try to be here for that. It's going to be a pretty big announcement. It'll move the markets. And we'll see in what direction we ended the day yesterday, well off the lows, same as the day before. So, you can assume that well, there's a little bit of distribution. They're actually on balance accumulating something. So we'll have to see what sectors have worked the best in the past couple of days to see what they're actually trying to pick up. I'm not sure where I can find that information, but that would be good to know. $7.31 FOMC rate decision. So a lot of big stuff today is ADP employment change, MBA mortgage application index at 7 a.m., which should have already happened. Actual was negative 1.4, which should put downward pressure on mortgage rates, which is good for me. Employment change was 156. Employment cost index was in line with whatever. Chicago PMI. What's Chicago PMI? PMI to me stands for private mortgage insurance. Crude oil, inventories, and then Fed rate decision this afternoon. My NASDAQ got up to even before taking a little bit off yesterday. That's pretty impressive. All right. I think I'm going to try to start a new stocks watch list here. Something I haven't done in a while. My buddy Anik on earnings had a really good move. Looks great up here. INSG. Now, I used to have an add-on. Oh, it's for crypto finance. It used to be a stock add-on in here that I could. Let's try this. Okay. So we put INSG on my list. Twilio is back at the 50-day, which has historically been pretty good for it. Downward channel. We're going to do TWLO, which is 50-day bounce. KG, and undecided. Chegg yesterday pulled back quite a bit. Etsy. This would have to be a cup or a saucer. Eight one. $7.31. Funko's been on my list. Funko's 8.8. ZTO did pop up over 20 for a second. Earnings on 9.15. Bottom for ZTO. A Biomed is still looking really good. Haven't had an opportunity to jump in on this one. 8.1 for a Biomed. This is a, I'm not sure what to call this turnaround play. Long turnaround. It's really what it is. Okay. Sand already took off SQ. Earnings are tomorrow. And market's opening in 2 minutes, it looks like. So let's see. See if I can get all these done in 2 minutes. Come on, STZ. There you go. Hey, what's up, Rob? Yeah, a little early today. I woke up kind of early. So easy to jump in here. Shopify, 50-day bounce maybe. And they have earnings soon as well. 8.1. Everyone's got earnings 8.1. What the hell, man? Like, yeah, we're not going to give you any time to make a decision. That basis, that structure's looking, that's really what I wanted it to do. That's looking really good. I like the GLD trade. I may jump back in that. yet he's not looking too bad. GE had earnings this morning. They're gapping up a little bit to 10.8. So they're just above all of this. So they're right there. So GE with earnings already looking pretty good. We'll see if it continues a rally or sells off. TLRA. I'm not even sure if this is a flat base. No, it'd have to be. It's basically a consolidation. G's up 2%. Let's see what it does. 8.6, and I didn't get through everything before the market opened. Rare that GE's leading any list. GE's on top by 2%. Woohoo! So again, the FOMC decision later today, 11 a.m. my time, 2 p.m. Eastern time. I should be able to be live for that. I do want to get a plan built together though. See what's what. Although that may change as the day progresses. Who knows? Who knows? Already coming off a 2% there is GE. Square ended up coming back nicely yesterday and the day before. I actually kind of had a nice. It's looking much better here. Right ahead of earnings. This is kind of one of my leading ones right now in the market. Hasn't really had a chance to rally in a leading industry. Unfortunately, it's a laggard in the payments sector that it's in, but it's holding very nice and tight up here. Not a lot of distribution happening. Some elevated distribution ahead of earnings, but again, earnings are tomorrow after market. So still not much to do. May end this stream early, but we gotta do some work at least before we can leave work early. But yeah, so market here, I think it's doing a very cautious and probably correct thing. No one quite knows what the Fed's going to do. I think a 0.25% rate cut may dump the market. It may come back in a few days though. 0.25% may cut the market, may come back, but it may mean that our breakouts are more languishing. A 0.5% rate cut, I think the market would definitely try to move higher. Hopefully it doesn't sell off after that. But at this stage of the game, I'm not sure why they're so focused on freaking rate cuts. Can't quite get my head around that. Maybe they're just trying to play the Fed. They could be just trying to play the Fed too. I mean, market's sitting at all-time highs. The Fed has really no major mantra to cut rates based on where the stock market is. But anyway, they've made it move higher. They've made it into moving to all-time highs while making it feel like it's about to crash. It's a pretty good game that they're running out there. So maybe they're just trying to get easy money, but we'll see. All right, market just about flat here. Again, not much going on. Square so far with a nice morning. GE still at 2%. Started at 2.2, 2.3, so it's a little bit lower. Nothing insane today in terms of GE, but ideally this will start its run higher. Remember, I do have an options play on GE on the books right now, so hopefully, actually, so far my options plays worked out pretty well. I mean, it's not a big position. But it's basically free, so can't argue too much with a free options position. I'm a little bit underwater in it because nothing's really moved in terms of price. And it's out till October, so it's going to take a while for some of that to kick in. But if it starts moving up, I'll be all right. So we'll see if it even moves up. We'll see. But anyway, it's in the charts. So we'll see what it does. All right, let's go take a look at cheap stock list. Daily movers. Let's see what's moving this morning. Bunch of gaps on earnings. EA Sports. LPI. There's an interesting little guy. Nothing too bad there. Laredo Petroleum. Okay. NOV. I'm not quite sure what you are. But you're getting froggy today. You were happy yesterday on earnings and extending further today. That's a good sign. National Oil Well. So another oil company. Is oil coming back? That looks like the same chart. I'll bet you that's oil. Apple. Oh, Apple. 5% gap up on earnings. That's going to move markets. And that's a gap and go for Apple, ladies and gentlemen. We'll see if that one gets filled. That's pretty good. That's probably a pretty good one. NBR breaking over the 50-day. And whatever this is. Global watch list. FSS. Big gap up on earnings there. Garmin. Apple again looking pretty good here. INS in new highs, ladies and gentlemen. We've had this off of our list for a while. And looks like it's rallying. 8.5 before market. Arxen, Casa, Soy. Comvault. Ferrari. Therm. TNA small caps looking like they're getting froggy. Look at that. That's pretty that's a bullish base right there, guys. That's a good one. Tesla up a little bit more. They've been they bounced right off that 50-day. I mentioned that the other day. They bounced right off of that. Came right to the 50-day and they found support. So that's pretty bullish for Tesla, I think. If we can maintain above that 50 line, I mean, it's great. Let's go back into an uptrend. Finazar, that's a nice little base structure right there. iRobot, it's dead. INSG looks really good. I really like the way INSG looks. Twitter holding up nice and high after its earnings breakout. Was that 158? That seems like a big number for Twitter. Wow. Did that have one-time charges in it or one-time events in it or what? 22 estimate, 158 actual. When were earnings? The 26th? Costs and expenses up 21%. Total engagements up 20%. Cost per engagement was flat. Ad revenue up 21%. Beat estimates on monetizable daily users. That's good. Monetized daily active usage 139 versus 1.36. Who cares? Okay, sales. Why do they have such a big beat? This hopefully will give us a nice one. Quarterly earnings of 0.05 per share, which missed analyst expectations of 0.19 by 73%. What do you mean it missed? For quarterly sales, they missed. This guy has a missing. How come here it's showing $1.58? Come here to get clarification, not to be confused. All right, now I'm just confused. All right, NASDAQ going flat again here. Tesla up 1%. Twitter was up, and they've since dropped a tremendous amount. All right, let's go back to the top. FSS. Not sure who these guys are, but that's a great looking chart right there on the weekly. Not much to do there though. It's already too far up. Garmin already selling off. Apple looks like it's maintaining. Paycom, they had earnings yesterday and barely moving this morning. WINS, Beyond Meat, Ameren. Looks like they had a gap up overnight and came back down pretty hard. They could try to come back 2 cents versus, so they actually made money versus a loss. Not sure why the street isn't too happy with that. Their morning range here is pretty good. Look at those bottoming candles. Maybe this does reverse. This may not. This may be. So if we're gonna break out of our morning range, 1909 right there is gonna be our alert level. Let me throw an alert there for Ameren to possibly break up. Obviously, everyone's gonna be focused on the drug. $100 million. Increases in new and reoccurring prescriptions in the Vasepta. Oh, we're going to get there quick. I better stop talking about it and better be about it. Okay, so looks like that alert already triggered. And we're going to start breaking this opening range here. Get us up to maybe the $23 range. Ameren may be half immune from the Fed decision because it's a small biotech. Or smaller biotech, at least. I think. Don't quote me on that. Let's find out. How big is Ameren? $6 billion company, so it's not tiny by any stretch. I mean, just a gap fill there to. Actually, they're selling off from that level. Gap fill to 21. Could be in the cards. We shall see. I think I have Ameren already in my sights there. Huh. So it can do it once? See, I want it every time. I'd like it to sustain. Oh, shite. You see that? Holy shite. The hell just happened? Spiked up to 20? Someone fat fingered 199 instead of, no, it's a straight up 20. That's going to make things difficult. Yeah, I couldn't even see it on the time and sales list there, Rob. That was egregious. What's up, Alan? Thanks for joining us today. Looks like Ameren is trying to get off of the lows here with a pretty decent earnings report, although, not much is going to happen here until their drug that they're waiting for, but it's holding up in a super pattern. And I'm not sure what's up with that spike. And yeah, it looks like it's rocking here. Coming back down. You're in KG with Rob? Let's go back down to the actionable list then. Where's GE? Down 0.37%. Yeah, look at GE. Come on, GE. Okay, Carvana, Square. Square's doing good. LK. Yeti. Yeah, KG. Oh, it just spiked up a little bit there. That's not bad. Remember that little curl I kept talking about right there that we talk about in crypto? There's a little baby curl right there. So hopefully that'll start expanding up right there. It's past our trend line, which is a little, this is low. It probably should be right there. Yeah, I'll leave it like that. But that little curl looks like it's getting going. Not a whole lot of volume yet though. TLRA, where's that guy at? You up here? Oh, you're down here, 123. Yeah, I like TLRA. It's a really good looking pattern. It looks like it's going to move on earnings next week sometime. That's a good one. Let's go see what's at the actionable list. KG looking pretty good. Okay, coming right back. They had earnings. 75 cents. They're not saying what is the estimate, but that's pretty decent, I guess. It was aftermarket last night and did nothing after hours. Literally nothing. So that's not super encouraging. Carvana trying to come back. LK trying to maintain. I really do like this INSG chart though. I got to line up one of these. Just pretty continuous good action, especially on the right side of this chart. I like the stair stepping, plenty of pocket pivots. Just pick a pocket pivot and you're done. What's up, Eli? 8.6 is earnings. So I wish we knew a little bit more about INSG. I mean, we know it's a 5G play, but we don't quite fully, I don't think we fully understand what they do. Only a 66 composite rating out of a possible 99, so not too great there. But the price action recently, like I said, has been really good. That gets me interested. I'll show you the info here. Yeah, Alan, it is Thinkorswim. So same industry group as UBNT. I've never heard of VSAP before. That's a new one. Or Switch. Seen Zayo around. C plus group rating, so the group's not super hot. But they're not quite in the same range as Ubiquity. I mean, 3-year sales not very good. There's really no major reason for this thing to start running. 18% of funds owning stock is very good, though. 2.1 up, down volume. So the institutions are interested maybe even before the numbers show it. And it is a small stock. It's at $5, but that puts it in the range of a Jesse Stein super stock, which is why I want to know more about it. If you read that book, if you read that book and follow that guy's philosophy, you learn everything about these companies, and you get involved at really, really good points. NASDAQ looks like it's dropping a little bit lower again. Regardless, though, let's take a look at I want to look at a trade here for INSG. Trying to figure out where this thing could go. I mean, again, without knowing a tremendous amount about it, looks like we have a previous high on the weekly back at 689, and we're setting up just beneath that, which is beautiful. And that's kind of your time to get in, right? Is right about there. I think could try to get in a little bit lower, but that would overtake that previous high, which would also work out pretty good. I can imagine though if this earnings report is good, it'll just blast off. You'll be up 10, 15, 20% before you know it. So it's an interesting dichotomy in stocks like this, especially little guys. So the Jesse Stein super stocks, he has them topping out at about 25. And the latest option I have is 3/20/20. So it'd have to get up here, which seems crazy. Yeah, this may be one of those candidates for a deep in the money call. Just blanket buying a deep in the money call. Yeah, hard to know exactly where this thing could go. Most of them rally about 20%, which for this guy isn't very far at all. $5.50 stock, 20% is gonna be right here somewhere. $6.60. Yep. So 660 doesn't give me a lot of options in options. All right, guys. So as you know, the Fed makes her rates decision today, and that'll be a market mover. I will say that the NASDAQ action the past week actually hasn't been too bad. They've done a really good job of making this feel bearish while not being bearish. You've got all these candles well off of the lows, especially yesterday's candle. Look at the volume increase and look at where we closed. We closed at like 65-70% of the daily range. It's pretty impressive. And the day before, something similar, although it was lower volume the day before on the futures. So maybe they may be setting up for things to bounce after the Fed. Maybe in either direction it'll bounce after the Fed. We never do quite know how that's going to work out. GE, Eli looks like it had earnings and ended up, looks like it's red here today. Not doing very good. So instead of bouncing up, maybe we'll just languish around here some more. I thought that earnings would have been a really good spark for GE, but I guess they didn't get what they wanted out of them. As GE starts to edge lower even still. Cash flow's the real story. Boeing 737 MAX grounding impacted 1H cash flow. What's H? I'm not sure what H means. By about $600 million. That's a lot. Thanks, Boeing, for ruining GE. All right, let's go top down again. So probably not a lot to do today until the Fed announcement. I may bow out early again, do some more work. D.H. Horton yesterday had that nice breakout today. It looks like it extended a little bit further today. Looks like it's holding those gains, which is good. A Biomed's been looking really good since it broke that trend line right there. I just got to say, it's been working. I like INSG. Square is looking promising, although it has earnings coming up tomorrow after market. Snap. Cyber down here. Got pretty far down the other day. Looks like it's trying to bounce back. There's that 50-day moving average. It kind of bounced even before it got to it. Kiwi's still looking good. I like how Kiwi looks, actually. A little bit more upward trajectory would be nice, though. Yeti's not looking bad. Yeti was taking the dumps past few mornings, but looks like it's sustaining here at this 53 level. Hopefully this is the bottom for it and we can get going again. We have earnings on 8-1 for Yeti. And as I say that, it looks taking a dump. Don't take a dump too far, Yeti. Don't do it. Don't do it. Take-Two Interactive. MJ finding a bottom yesterday, apparently, after... so MJ is an interesting story. Obviously, it's the marijuana sector ETF. Getting down towards this trend line. And it looks like we have some bouncing potentially to do. So we have this thing bottoming maybe, about 918, give or take. So that's like a month and a half from now. Can we get back on with the uptrend after that? I think everybody here agrees that MJ needs to start getting into an uptrend. So just asking the powers that be. And Take-Two Interactive, Upeld. You looking at anything, Eli, or are you just window shopping? I'm basically window shopping at this stage of the game. Etsy looks pretty good. That's got earnings coming up too. I think that's 8-1. 8-1 again. The day after tomorrow is going to be a very interesting day with everything just moving all over the place. Amazon, not super interested. Twilio. MDCO still chopping up the bottom part of that trend line. Declining volume, though, looks like it's after... It's a bit much so far. I actually don't have any courses, Alan. Yeah, I'm not really good at monetizing my stuff, to be honest with you. No, I don't have an options course. I probably should put together something, though. That's actually probably a pretty good idea. Do you have any questions I can answer for you? I mean, I'll be happy to answer some questions. You say you're playing with... So let me give you my take on options, Alan. So first things first with options. If you're just going to go like a... So I do this often. I'll just do I'll just buy a call. Let's use INSG as an example because it's a stock that I'm currently looking at. This is INSG. It's a pretty decent 5G stock. They apparently have somewhat of a leadership role. But anyway, regardless of that, I mean, ideally you should have some fundamentals behind your trades. You don't have to, but it really helps to have confidence in the stock. Now, this one, tremendous volume on the right side here, lots of pocket pivots. So let's go look at the options book on this one. So are you clear with kind of some of the general terminology, calls, puts, strike, stuff like that? I'll go over kind of my trade grid. No, I don't want. I want to see a chart. I don't get any charts at all over here. Long calls and puts. Yeah, see, I don't do a lot of, what do they call them? Exotic options. I don't do a lot of exotic options, which are, like butterflies and long butterfly collars and stuff like that. Oh, in the money. Okay. So yeah, so that's pretty simple. Okay. So in the money, actually let's pick a different one that has more strike prices. Okay, yeah, we can do it with this one. So okay, so you know what a strike price? Do you know what a strike price is? There's about a 20-second delay from when I talk and when you hear me, so I may have to answer your question before you can. Um, okay, so this is a $5.27 stock. The only thing that in the money or out of the money means is that when you are looking at an option, is it underneath the price or it's above the price? Okay, so $5 is below the price of the option. I'm sorry, the $5 strike is below the price of the option at this current time. That means this is in the money. That means this is in the money. In other words, a little bit of history on options, which will probably give some clarity to this. An option is, where you can basically, you're buying the right to buy 100 shares of INSG at $5, and you're paying $1.10 per share for that, right? So you can actually, if a option is in the money, you can actually take what's called assignment of those 100 shares at any time. So if you were to buy this, you could go ahead and exercise what's called exercise this option, and just change this option. Just think of it like a ticket. You can change this ticket for 100 shares of INSG, and you're going to pay $5 per share, and it's at 526. So you're getting a little bit of a discount, but you're paying for the discount, and it's not really a discount, obviously, because you're paying $1.10 for something that's 26 cents right now. Yeah, so in the money means that you can exercise that option. That's all that it means. Out of the money means that you cannot exercise the option. So there's this line in the sand. Is my option worthless, or can I exercise this option? And that's what in the money refers to. It goes back to the historical meaning of options. Is, hey, I can actually exercise this option. So if it's in the money, you can exercise it or sell it, whatever you want to do with it. If it's out of the money, you have no option to exercise the option. So, yeah. So in the money means that the stock price is above your strike price. That's in the money. So out of the money would mean that your strike price is above the stock price. So now, okay, so that answers that first question, I hope. Okay, so yeah, let me give a little bit more explanation here, Alan. So there's a few ways you can actually make money with options. Okay, let's just get that out of the way. How do I make money with options? Well, like with anything in life, you sell it for more than you pay for it, right? It's pretty simple. That's how you make money with options. Okay, so how does an option become worth more than what I paid for it? That's a great question. An option becomes worth more if the stock price goes up. Pretty simple. Okay, that's how everyone thinks it works, and that's actually how it does work. But there's some other components that as a trader you need to take into consideration. So I'm just going to write stuff down. So you want the price to go up. Now, let's take this $5 option right here, okay? Let's just do some simple math. Okay, so the strike price is $5. And I'll talk about stops in a second. Don't worry about stops. Just kind of follow with me on how we make money. And at the end, what I'm going to come to the conclusion is that you have about a 25% chance of winning when buying an option. Options are some of the most risky things you can do in the stock market, okay? Let's just get that out there in the beginning. This is some of the most risky trading you will ever do. This isn't something, you're doing good paper trading, you're doing great paper trading, but you're coming to the conclusion that, it's a bit much and you're probably not making money. Okay, so let's figure out how we make money. So yeah, obviously we want the stock, we want it to go up, and we think we're going to make money. We're going to pay $1.10. So I'm writing 5 and I'm writing plus 110. That's going to equal $6.10. So if you were to buy this option right now, it needs to go up to $6.10 for you to break even. That's a 20% gain. Okay? So on this particular stock, with this particular strike price going out to March 2020, which is why it's so expensive, but forget about the expiration for right now. We'll get to that in a minute, although I'm sure you understand how that part works. But you need to have the expectation that this is going to 610. This is kind of how I visually do my options. Okay, so I'm right here. I need this thing to go to 610 by March 2020. And that's my break-even point. Okay? Keep that in mind. Everyone thinks, oh, I'm going to, it's going to pop here. I'm just going to buy this option, and I'm going to make money. Well, this is why I say you have a 25% chance of that not working out. Okay? Yeah, I'm sorry. This is why I have a 25% chance of winning and a 75% chance of things not working out. So right now, your break-even point in this option is 610. That's your break-even point. Keep in mind. And then, so you need to have this rally of 15% before the option expiration, right? That's pretty obvious. So this is above the I think this is right near the all-time high for INSG. But regardless, you got to get to 610. So let's try to take an earlier one. So let's take this $5 option right here. So I'm going to write another line, 5 plus 50 cents. So 5 plus 0.5 equals 5.50. Okay, this expires on August 16th. Let's go to August 16th, which is right here. Let's go to 5.50. Sorry, I'm trying to be really deliberate with my movements here. Close enough, 5.51. Okay, so these are both of our options choices that we've selected so far. This is your break-even point for the one that closes on August 16th. This is your break-even point for the one that closes on March 23rd. Now, we could actually, let's do this. Let's just do this for fun. There's only a few strike prices. Let's do September, which is $5 plus 60 cents, which is $5.60, and that's on September 20th. Okay, so there's that one. And the next one is $5.85, December 20th. I'm being very deliberate here. Okay, so those are your options. Those are your break-even points for each of those options plays. Okay, so how do you make money? Well, you make money by it going above each of these prices before these specific dates. Okay, so let's write that down. Make money. You only have one way to make money. This is why you only have a 25% chance of winning. It doesn't mean you shouldn't trade options. It means you should know what the F you're doing before you do it. Okay? So make money. Go past break-even point by expiration. That's the only way you make money. This is, again, just with a single call going up or a single put going up. Okay? So now, notice I'm not talking about in the money or out of the money. It has nothing to do with any of that. Those are basically identifying terms saying, are you expecting the stock? Well, those are just identifying terms. Forget about in the money or out of the money. It really doesn't matter, to be honest with you. It doesn't matter. There's other ways you can manipulate options using things that are in the money and that are out of the money, but those don't really. Just forget about in the money, out of the money. It's good that you know what they mean, because you're going to hear people talk about deep in the money, or I don't know, what's the other one? Far out of the money. I don't know if there's a term for that. But regardless, how do you make money? You make money by, if you buy this option, it's got to go above this price before this day. This one has to go up above this price. This is just simple math that I'm doing. Notice I have done nothing crazy. I have 5 plus 110, 5 plus 0.5, 5 plus 0.6. Very, very simple math. So you have to have that expectation that this is going to occur. So how do you lose money? Okay, well, let's write that down. You can lose money if the stock does not go to that point or beyond. Stock does not get there. Okay? Also keep in mind, that's your break-even point. Okay? That's your break-even point. How else do you lose money? And this is something that often is not very well described in the public with options. You will lose money because of, so we have our strike play, in our simple math, we have, let's take this one, for example, 5 plus 110. So where does this 110 number come from? Why isn't this 0.85? Why isn't it 0.65? Why is it 110? You'd think there's some major logic behind that. Well, no, you can, Alan. You can sell for a profit. So let's take this scenario here. Okay, so I'm glad you spoke up. So let's get back to making money. Okay, let's just stay here with making money for right now. So let's just say because earnings are coming up on INSG on 8/6. We have this until 8/19. So let's say on 8/6, this thing pops up like this. Is it doable? Yes. Absolutely, it's doable. Let's say it gets up here to 586. Let's do our simple math. Okay, so 586. Okay, so let's say it gets up to 586 and we paid, what do we pay for this? 50 cents? Yeah, 50 cents. Okay, so we take the 586, we minus the 50 cents that we paid. Oh, actually, strike that. This will be worth 86 cents if that occurs. Okay? Then we subtract the 50 cents and we're left with 36 cents of profit. Okay? So just by simple math, that's 50 plus 70. This is called 75% profit because I'm lazy right now. Let's just say it's 75% profit. Can you sell that on this day for 75% profit? Yes, you can. You can do that. So no, you are correct in your assumption you can sell before. My general point was it has to be above this before expiration. My point is that after expiration, obviously this option is worth 0, right? So, but yeah, you can sell this at any time. You can sell this at any time. So in this scenario, you have this whole, this is essentially, this is your wheelhouse with this option is right here, right? Like this is where you can make money with this option. In theory, this is where you can make money. Obviously, after this, it's worthless. But no, you are correct. You can sell it early. You can definitely sell it early. Okay. So, yeah, that's how you make money on any option, right? Is that it pops up. Now, if we're clear on that, I want to go back to, the ways that you lose money. And this is the one thing that is kind of hard to decipher, which is why I think doing lines like this are advantageous. At least they are for me. This is how I sometimes analyze things like this. If you see me draw a trend line up, this is exactly what I'm doing. So usually what I do here is I draw up because I draw up like a 20% trend line. I'm like, so there's 20%. I'm like, okay, how far out do I want to go with this? Like, what do I think is reasonable here? And then I look for the appropriate expiration date. Okay, so yes, you can make money. This pops up, you're going to make 75%, give or take. You may make more than that. And that also goes into what I'm talking about here. Okay, so if the stock, my whole point about this is if the stock flounders about and doesn't get above, let's say this pop never happens. Let's say earnings happens and it pops up to here, or let me just do this. Let's say on earnings, the stock just does this. Let's say earnings, it isn't that great for whatever reason, and it only pops a little bit. Okay, let's say it only pops this much. Well, guess what? It's under your break-even point here. So you're never going to be break-even in this position. It's just simple math at that stage of the game. Yes, if it pops above, you can sell it. You can sell this option whenever you want. You can sell it right after you buy it if you want to. But anyway, the whole point is that it has to get above this price at some point, and you have to sell it above that price, before the option expiration. Okay, so going back to this. This is called premium. Okay, so so let's just say this. There's something called intrinsic value and extrinsic value. Big words, big word alert. Intrinsic means how much you're in the money. Okay? And they also call that ITM. So I'm going to write intrinsic, how much you are ITM, how much you're in the money. So let's just we've been working with this one for March 2020. So $5, your $5 call that we've been playing with here, your intrinsic value is 27 cents. So you're going to write INT-0.27. Okay, that's your intrinsic value. Your option is literally worth right now at this second in time 27 cents. That's what this option is literally worth. Anything past 27 cents is extrinsic value. Okay, this is also called premium. And the options market makers kind of set this value. I don't have a great formula for how they set that. There's a theory, well, not a theory, but there's a mathematical model called the Black-Scholes formula if you really want to get deep into how they're supposed to set these options prices. But anyway, so what we can do here is we can take, again, let's do our simple math. We can take our 110 minus the 27 cents, and that's going to equal what, like 73 cents or something? 83 cents? I think it's going to equal 83 cents. Okay, so you're paying 83 cents premium for this $5 call, which is in the money because our strike price is below the stock price. So you're paying 83 cents for that. How that gets set, I really don't have a great answer for you on that one. But that is what you have to watch out for, that intrinsic versus extrinsic value. Okay, that 83 cents, that is your premium. When I talk about premium, I'm talking about the extrinsic value. Now, let's do that same simple math on this 750, okay? So how much is 750 below $5? 0. So we start with 0, and then we minus the 55 cents that option is worth. So how much is our premium? 55 cents. This is all premium. So in this scenario, this has to get to 755 or 750 plus 55, which is 805. So for this option to be profitable, you have to get to 805 by this longer expiration date over here. I'm not going to draw it out. Well, actually, you know what? I'll draw it out. Why not? Just so you get the gist of it. And notice I have to go way the F out here. $809 is close enough. So so these two strike prices, that's what this has to do. This has to get up here for you to even break even in this particular option. So why would I ever buy this one? Why wouldn't I just buy this one? Good question. You're probably an idiot. Not you personally, you know what I'm saying. So anyway, this stock is turning out to be a pretty good example, I think. So you can see right there, you really need to know what your break-even point is in these options, okay? So you lose money if the stock does not get to your price, to your break-even price or beyond by the expiration date, right? So these are the basically slightly in the money calls. This is your next strike price out, which is obviously these ones are going to be crazy. So one of the ways that you lose at options very silently, is they will actually bid up these ask prices and sell them to you because you don't know what you're doing. So be very careful with how much you pay for an option. And if it's too rich, you have to not take the trade, even if the trade looks good, because you only have a 25% chance of winning. You only have a 25% chance of winning. So by that token, let's say you think INSG is going to blast off here, right? And you think, oh, this thing's going to go gangbusters. Maybe it'll go to $6.50. And let's just say you're not really paying attention. You think 55 cents is cheap, $1.10 is too rich. And let's say for whatever reason you ignore the strike price. Well, guess what? As time goes on, since this is all premium, this all gets reduced every single day. Okay, so I can actually show you this a little bit. Thinkorswim has a think back option. If you go to analyze and go to think back, you can actually do some historical analysis here, and I can kind of show you a little bit about how that decay works. It's called decay. It's called a lot of things. It's called theta, decay. It's called a lot of stuff. But regardless, let's go back in time here. Let's go back within the space. Let's go here to 226 and see if we still have March, December 20 options, which we may not. We do not. Okay. We do have September 20. So let's write these numbers down. So this is INSG. And I'm just doing this very, very... Let's do something actually around the same price. Okay. So let's pick this day. Actually, let's do this. Let's do... nope, we're over here. We're what? 226? Oh, that's at the high. Okay, let's go today. Let's just do right here today. Let's do the close on 220. So this is this day right here. So the close on 220, let's do September 20. And let's do that $5 call. Okay? It's worth $1.50. That's what they're charging for it. And what are they charging for September today? 65 cents. Okay, so let's say you bought this right here. For whatever reason, I mean, just forget about the chart. Let's just say you bought it. You bought it on this day, which isn't a bad day. I mean, it's up a little bit. It took a little bit of a pause, and then you bought it at the end of the close because you liked it for whatever reason. And you bought it September because you thought it was going to go up forever, and you paid $1.50 for that. Okay, let's just say you always buy at the ask. You paid $1.50 for that. Well, guess what's happened? You've lost September, so that's about a year. It's like 9 months. It's a long time. Okay, you wouldn't have held that, but we're just talking theory. That's a long time. The price has done nothing. And your option's worth 65 cents. That's time decay. Right there. So you've lost 85, 90 cents over that year. Okay, that's a large example of time decay, but that can happen. That can happen in short fashion as well. So talking about this intrinsic, extrinsic value, the premium that you're paying in the option here, this is what happens. Options market makers, they will bump up the premium because they can. Okay, an option is a commodity like anything else, right? Like let's say Christmas wasn't the biggest holiday of the year, but people like Christmas. Valentine's Day is a great example. Call for jury duty later, Rob. Good luck. Find him guilty. Valentine's Day is a perfect example. Okay, let's say cards throughout the year are worth, they charge you $1 for all these cards, but Valentine's Day comes and now they're going to charge you $2.50 for these cards because it's freaking Valentine's Day and you have to buy a card. Otherwise, you don't get laid that night. Okay? So they do the same thing with options around earnings time. All right? They really do. They bump up these premiums and options around earnings time. And percentage-wise, I don't know exactly how much. I haven't actually tracked it. But you can look at some options and, I don't know, let's just call it 2 weeks before earnings for like a really long expiration date, come back and they'll be up by 20, 30%. So you really have to be careful with how much of this premium that you're paying. Okay. Now I want you to notice something here too. This in the money call, look at the difference in the bid and the ask, 105 versus 110. That's about a 5% spread because we're right around $1. Let's use easy math here. The difference between $1.10 and $1.05 is about 5%. But what about the next strike price, $7.50? 35 cents to 55 cents? Let's do some math because my numbers suck. Let me just do it easy. 63% difference. You go from a 5% spread to a 63% spread just between these two strike prices. Now, obviously, this is 50% higher, but my whole point is that they will sell you egregiously expensive options. So this is one of the main reasons how people lose. One way you can lose money is by misreading the direction, right? Second way you can lose is by misreading, sorry, I'm writing as I'm doing this, misreading how long it will take. So misreading time. So time is expiration. You can miss on time. You can also miss on straight up direction. You think the stock's going to rise on earnings and you buy an option. Maybe it falls on earnings. You got that one wrong. You can also lose based on time. Maybe it pops after your option expires. Well, you obviously were right on the direction. You were wrong on the time. The third way you can lose, and you can get both of those right, is by buying the wrong premium, which is exactly what I'm describing. You can spend way too much in premium, buying too much premium. Okay, so you can buy too much premium, and you can definitely lose in that fashion. Easily. It's super easy to lose. So like I said, you've got a 25% chance to win in options. You have to get the direction right, you have to get the time right, and you cannot pay too much premium. If you can nail those three things, you'll do very, very well. Okay, now again, I'm just talking basic option strategies. There's going to be some people that do some more exotic strategies where you can actually, sell options and buy options simultaneously to reduce your cost and therefore your risk. I'm not super up on all of those strategies because there's a lot of them. I think you can, okay, so here you can, these are many of the different things you can do with options. Right here, all these, and you can Google this to find out a definition. And to be honest with you, I'm not even that great with, I couldn't tell you what a strangle is. I just can't, or a butterfly, or a condor. I used to know what an iron condor is. That's a pretty decent strategy. But anyway, I think an iron condor profits if the stock is flat over a period of time. I think, just don't quote me on that. But so there's a number of different more exotic option strategies. A single is just buy a call, buy a put, have a good day. That's all that is. But anyway, you basically have a few ways to lose with options and really one way to win. Really one way to win. So you've got to be extremely clear with your trading strategy, Alan. You've got to be extremely clear with the time duration. You have to be extremely clear that the option is even priced correctly for you to want to get involved. If you can do those three things, Alan, I say you can take a trade. If you can't do those three things, then I think you just continue paper trading until as long as it takes. That's kind of my 2 cents on that whole thing. Yeah. So that's a very basic. So let's just take INSG here as an example, because I am looking at this trade. Let's use this as an example. Hasn't broken out yet. Has earnings coming up, and I actually have a tool that kind of does this for me right here. So I'm going to use this tool. This does a lot of this math and it does it quickly. So I'm going to do it off screen here because I can't show everything at the same time. But okay, so let's kind of zoom in here. Okay, so I like INSG. I think INSG's the chart's fantastic. So let's talk about those three things. Let's talk about direction, time, and premium. So direction I think is up. Could I be wrong about that? Yes, but I always take that risk. So I'm going direction is I'm going to be correct. Okay, so let's assume I'm right on direction. Check. Direction is up. All right, that's an assumption. Okay, now time is the next question mark, and then premium is the next question mark. The question is how high is this going to go, and by when? Okay, so is it going to go above here by this particular date? Well, guess what? We happen to have earnings coming up, so it easily could pass that 8.6, right? It easily could pass this, like we discussed earlier. So here's our first decision you have to make. Am I just going to play earnings? Okay. Well, first of all, know something. Earnings are a 50-50 gamble. Period. They're just a gamble. You can win, you can lose, but you really don't have any say in the matter. All right. Could it get above here? Absolutely. It could gap up. It could be great. But keep in mind, this is like playing blackjack, or I'm sorry, roulette. This is like playing roulette. You have probably a little less than a 50-50 chance, just like you have at roulette. Your winning odds in roulette, I think, are like 47 to 43%, depending on the wheel that you're sitting at. And that's probably realistically what you're doing here when you're playing earnings. You know, you're paying too much in premium, but you already know that you're expecting a big pop. Okay, so it can move, but not exceed what you pay for it, and by that definition, you would lose. So you could pop, and then you can end up making money. So that's a trade you could take right there. Probably, I would argue, your biggest risk reward in terms of things, because keep in mind you're only buying premium here for 16 days. So if you notice, you're paying so it's let's just call it, it's $5.29 and you're paying 50 cents premium. So you're only paying 11 cents in premium. So it's not a horribly expensive option. Even at 50 cents, it's not horribly expensive. So it's your cheapest barrier to entry. This would be 65 cents. This would be 85 cents. This one would be $1.10. And with these, you're buying extra time. So maybe you think that maybe you think that if earnings fail, it won't fail that badly, and maybe it'll just flounder about here. If you're thinking that, then what you can do is you can buy a strike price that's further out, and then all that extrinsic value, all that time premium that you're buying, gives you a cushion. You have very little cushion here with this option. This is something I really didn't go into, but I'm sure you can infer that. The further out in time you go with your option, the more you pay in premium. I'm sure you could have figured that out by now. So, you're paying, what was it, 11 cents, a little less now. You're paying, actually it's more than 11 cents, like 21 cents. You're paying 21 cents in premium here for 16 days. Here, you're paying 36 cents in premium for 51 days. And so you can see as you go out, you actually pay less for more time. It's kind of like buying in bulk. You're buying bulk time out here, but in here you're buying bulk, and you're buying time in individual wrapped packages. It's like going to Costco and then going to your corner store and buying a single peanut butter cup. You're going to pay more here than you do here. So if you buy this one at $1.10 and it tanks, you're going to go down less on a percentage basis. Okay? But it's also going to go up less on a percentage basis because you paid $1.10 for it. So with this particular one, that's a decision you have to make. Am I just going to gamble here with most, if not all, of my money? Because if this thing loses for you, it's probably going to lose half to 70% of its value very quickly. Very, very quickly. Because right now there's a bunch of that premium built into the option because earnings come in 5 days. Okay, so there's going to be premium built into this right up until earnings, and then the day after earnings, if it doesn't pop or drop significantly, that premium is just going to evaporate. It's just going to go away. And so this 50-cent option, not to mention 5 days from now there'll only be 11 days left. So right now this option loses 1 cent every day. So 5 days from now this will be worth 45 cents just due to time value decay alone. And then if it doesn't pop, maybe this will be worth 35 cents. So you're going to be down significantly in this. So this is your gamble. This is more of a safe bet. Okay, this one is going to lose less than 1 cent per day. Okay, so by the time earnings come, this will probably still be $1.10, maybe $1.09. Okay, so you'll lose less money from that perspective. And then if it flounders about and goes sideways, this may be worth 107, 106. So this is a much safer bet from a risk perspective. But from a reward perspective, let's say this thing does pop up to $6. Okay, this is going to pop. Let's say this pops up to $6. Your option that you paid for is going to be worth about 50 cents. Because guess what? Well, actually, it'll be worth about $1, so you'll make about 50 cents. So maybe you'll double if this gets to $6, which is great. Congratulations, you doubled it. This one is worth. So this is going to be worth basically break even for you, but you will gain that extra time value. So maybe this will go up 30 to 40%. Maybe this will go up 30%. This doubles, this goes up 30%. But your risk here is much less. Your risk here is maybe 10 to 15% if there's not a major drop. Your risk here is about 40 to 70% if you're flat. You see the difference in and these are somewhere in between, obviously. So this is your dichotomy when you're trading options. Am I risk on? Am I risk off? Risk on? Risk off. You can kind of bet a little bit on this working, and I don't really mind this one, to be honest with you. It's not the worst one in the world. But again, you're going to have to hold that until it gets past 610, So is there a possibility that if this gets to $6, that you'll have made money? Yes, you will make money because there's all this time premium built in. Okay. So anyway, I think that's all I got for you today. Alan, you haven't said anything in a while. I hope you're still here taking advantage of that. Questions, comments, concerns? I'm going to bounce. Got LKGE's taking it on the chin. I'm not very happy with GE. Kiwi's doing good, 184. That's good. Kiwi's moving. And OKE doing okay. Nothing, huh? All right, guys. Well, I'm going to get out of here. Hopefully, I wasn't talking out of my butt there for nothing. All right, guys. I'm going to get out of here. Have a good day. I will see you tomorrow, I think, and maybe later today with the FOMC decision. So, all right, guys. Have a good one. Bye-bye.